Hello friends, good afternoon and welcome to the next webinar series on under GST. Today we have Dr. Sanjeev Kumar with us, who is an MCom, LLB, PGDI, PRL and PhD. He did General Management from Sloan School, Massachusetts and Institute of Technology, Boston, and COBOL Programming from IIT Kanpur. He is a fellow member of the Institute of Cost Accountants as well as ICSI. He has over 35 years of experience in the field of corporate, business and economic laws, company law, indirect taxes, corporate finance, accounts, costing, budgeting, MIS systems, corporate affairs, as well as capital market and mutual funds. He is currently the Managing Director of BPA Advisory Limited. He is also the founder and chairman of BPA Foundation and president of Indian Economic Foundation. Earlier, he was a Director of Corporate and Legal Affairs with Bajaj Hindustan Sugar Limited, the largest manufacturers of sugar and ethanol in the country. Sir has also authored about 25 books in law, out of which his contributions in the Ramayya's Companies Act 2013 has been really remarkable, besides his maiden book on corporate criminology. Sir has assisted former Chief Justice of India in editing Civil Law Manual. He has also written the Mercantile Law section of the Annual Survey of Indian Laws 2003-2004 and also in various journals and newspapers of Chartered Secretary, Corporate Law Advisor, SEBI and Corporate Laws. He is a vivid speaker and a member of various committees and core groups of ICSI, ASSOCHAM and PhD CCI. Today, Sir will take us to the issues relating to TDS, TCS and refunds under GST. Over to you, sir.
Thank you, Nikita. Good afternoon, friends. The agenda for today's discussion in the series of this master classes relates to refunds, tax deduction at source and tax collection at source. Before I take up the agenda straight, I think let's recapitulate. We have already understood certain basics of GST, and by just a recapitulation, we know that what is GST. We know that it's a tax on goods and services with value addition at each stage, having comprehensive and continuous chain of set of benefits from the producers or service providers point of view up to the retailer's label, where only the final consumer should bear the tax. So that incidence of tax in case of GST would be on the final consumer. Within the chain, this salvatability is available to the retailers, the producers and other intermediaries. The new tax structure has got three categories of situations or applications. First, on intrastate taxable supply. We know that excise and service tax will be clubbed and will be known as CGST now. Local VAT and other taxes will now be known as SGST. Second category is interstate taxable supplies. Earlier, we had central sales tax applicable on interstate taxable supplies. Now, we'll have integrated goods and service tax, IGST, applicable, which is expected to be approximately a sum total of CGST and SGST. Now, third category is import from outside India, on which custom duty will be leviable, and in place of CVD and SAD, IGST will be charged. So thus, we understand now there are three labels of GST. First, CGST, which will be a central levy and will be applicable on supply of goods and services within the state. Second label will be SGST, which is a state levy and will be applicable in addition to CGST on supply of goods and services within the state. And thirdly, IGST, which will be levied on interstate supply of goods and services, and it will be a central levy. With this brief intro, now we go to our agenda. First of all, I'll be discussing about the refunds in GST. We know that refunds are basically the amount due or recoverable or receivable by the taxpayer on account of various situations from the tax administration or tax department. Section 38 of the GST Act deals with the provisions relating to refunds. Explanation A to the Section 38 defines refund. I would read it. It's a refund includes refund of tax on goods and or services exported out of India or on inputs or input services used in the goods and or services which are exported out of India, or refund of tax on the supply of goods regarded as deemed export, or refund of unutilized input tax credit. Now, with the definition if we analyze, we find that refund would generally include refund of tax on goods and services exported outside India. Secondly, refund of input tax credit on goods or services exported outside India. Thirdly, refund of tax on supply regarded as deemed export. And fourthly, the refund of input tax credit, that is ITC, in case of exports. Now, let us see what can be the situations in which the possibility of refund may arise. I have listed out certain situations where refund would arise. The first situation in which refund would arise is excess payment of tax due to mistake or inadvertence. Secondly, export or deemed export of goods or services under claim of rebate or refund of accumulated ITC, I mean input tax credit, when goods or services are exported. Thirdly, refund due on finalization of provisional assessments. Next, refund of pre-deposit for filing appeal. There are conditions that before filing an appeal, you have to make a pre-deposit. So, refund of pre-deposit when appellant wins, refund arising pursuant to the order of appellate authority, as a matter of fact. Nextly, payment of tax during investigation, but as a consequence or as a result of investigation, no liability arises or reduced liability arises upon finalization of investigation or adjudication. Next situation is refund of tax payment on purchases made by embassies and United Nations bodies. That is a specific provision. Now, the credit accumulation due to output being tax exempt or nil rate, whereas input has a tax liability. Nextly, a credit accumulation which arises due to inverted tax structure, that is tax rate being differential between output and input. Next, there are situations where certain credit notes relating to incentives or discounts are issued by the suppliers at the year end or upon achieving a particular specified volume. So, in such situations also the differential of tax paid would arise and a refund will become due. And lastly, the tax refund for international tourists. Now, friends, out of these situations, I have summarized certain points relating to the particular situation which can be important for our knowledge. The first situation was excess payment of tax due to mistake or inadvertence. What are the reasons? The reasons are basically wrong mentioning of nature of tax, like CGST, SGST or IGST wrongly mentioned in place of one or the other. The second reason could be wrong mentioning of GSTIN. That is also possible due to inadvertence. And thirdly, wrong mentioning of tax amount. So that is also possible. So due to three reasons, the excess payment or some mistake in the payment makes it necessary to go for a refund situation. What is the process? How the refund in such situation would be handled or dealt with by the department? So in case of wrong mentioning of CGST, SGST, IGST or GSTIN, it shall be refunded after verification and correction within prescribed time, which I will deal with subsequently. But in case of wrong mentioning of tax amount, the excess amount may be adjusted against the future liabilities or refund can be sought. There can be two situations. There can be adjustment in the future tax liabilities by a credit available, or the refund can be sought. Situation 2, where export or deemed export of goods or services under claim of rebate or refund of accumulated input tax credit when goods and services are exported. What are the situations? In case there is no duty on input and zero duty on export, that is one situation. Another situation is in case there is a duty on input but zero duty on the export. Thirdly, when there is a duty on input and exports both, but rebate is available. Nextly, in case of deemed exports, where duty on input and export may be there, but rebate may be available. So how it goes about, how it is dealt with, the IC code of the exporter we know will be captured at the time of registration itself, and that will be available on the record. So application for refund in case of tax in input but zero tax or rebate on export or deemed export has to be made to the department. In case of export of services or deemed exports, separate application would be necessary. It will not be possible that a combined application is made for both the categories, separate applications for different categories. Now, the export shall be verified by the department. How? The verification will be done from shipping bill, mate receipt and bill of lading, or export invoice and the bank realization certificate called BRC. In case of export of services, invoice and BRC would be crucial document for verification. In case of deemed export, verification of IGST paid and collected as well as use of input tax credit will have to be verified. A declaration shall be required from the taxpayer certifying that the incidence of such tax and interest had not been passed on by him to any other person. If the refund is less than INR 5 lakhs, if it is more than 5 lakhs, a CS certificate would be required. Now, the next situation is related to provisional assessment. When a provisional assessment is made, there is a possibility of deficiency or surplus arising at the finalization of the provisional assessment. So, in that case, when the tax has been paid on provisional basis and surplus arises at the finalization of the provisional assessment, the refund will have to be sought for. The reason for the provisional tax payment return has to be specified, and the provisional assessment once finalized, the refund application will be taken up by the department. The differential can be claimed as a refund separately for the three categories of taxes, that is CGST, SGST and IGST. Refund shall be allowed only if GST paid has not been passed on to the consumer. A CS certificate will be required, and a declaration will be required certifying the incidence of such tax and interest not having been passed by the taxpayer to any other person in case the refund amount is less than rupees 5 lakhs. In case of refund amount being more than 5 lakhs, the CS certificate would be required. The next situation is refund of pre-deposits for filing appeal. This arises particularly when the appellant wins by virtue of the order of the appellate authority. What is pre-deposit? We know it's an amount or part of the amount against the demand in the adjudication order, which is required to be deposited before filing an appeal before the appellate authority. In case taxpayer wins the appeal, refund would arise. Application for refund of pre-deposit can be filed on the basis of the order of the appellate authority. A declaration, of course, will have to be filed certifying that the incidence of such tax and interest had not been passed by the taxpayer to any other person if the refund amount is below 5 lakhs. In case it is more than 5 lakhs, the CA certificate would be required. The next situation, as I said, is payment of tax during investigation proceedings. Upon finalization of the investigation or adjudication proceedings, there may be possibility that either no liability arises or a reduced liability arises as compared to the estimated liability in the beginning. Incidence of such payment would be based on the show cause notice and demand notice issued during an investigation proceeding. At the end of the investigation, if there is no liability or reduced liability, as I said, refund would arise. Application for refund of pre-deposit can be filed on the basis of the investigation order. And declaration, as usual, up to 5 lakhs has to be filed, certifying that the incidence has not been passed on. And in case of more than 5 lakhs amount, the CA certificate would be required. Refund of tax payment on purchases made by the embassies and United Nations bodies is based on a special mechanism which has been set up granting refund to these institutions or these organizations for on the purchase of the goods or services by them. It is being considered, or it is being advocated that a similar mechanism may be required for supply to CSD canteens or army canteens where the tax exemptions are available. In this case, refund can be based on purchase statement filed by the respective bodies claiming refund of GST, and refund can be allowed after matching the transactions electronically. The next situation which I stated was credit accumulation due to output being tax exempt or nil rated. So, where a taxpayer is supplying exempted or nil rated or non-GST goods or services, input tax credit would accumulate and it can be required to be refunded. Such ITC is called ineligible ITC, ineligible input tax credit. It accrues in the importing states in case of IGST. Refund may be sought in such cases by the taxpayer by adopting the usual process. Nextly, for credit accumulation due to inverted tax structure or a differential tax applicable between input and output may create a situation where refund would be required. ITC, as I said, accumulates on account of GST being higher on input than on output. It may also arise by virtue of stock accumulation or tax being paid on capital goods or on partial reverse charge. In this case, refund application is allowed after audit. ITC, input tax credit refunded, shall be blocked for reuse. Nextly, at the year end, as I said, volume based or annual incentives may be provided by the supplier of goods, and for that purpose credit notes may be issued. For refund of tax on such amounts of credit notes would be possible by making an application submitted to the department along with the CA certificate or a declaration if it is less than 5 lakhs. Input tax credit at buyer's end or output liability at supplier's end is adjusted in such cases. However, separate claims have to be made for refund in case of SGST, CGST or IGST. A special exemption is available to the international tourists. That means when the international tourists are coming to India, purchasing goods here, paying GST on that. So, under the policy, that GST may be refunded to the international tourists. There are about 52 countries which have adopted the refund of GST to the international tourists. It's likely to cover all registered dealers and may be available at the airport and ports. Now, after discussion about the situations which I have done, let us see when can you apply for refund. What is the time limit? Section 38(1) and 38(2) deals with the issue of time limit. It provides that an application for refund should be submitted within 2 years of relevant date. The limitation of 2 years shall not apply where such tax or interest or the amount has been paid under protest. Unutilized input tax credit can be claimed at the end of the tax period. No ITC will be refunded except in case of GST-free exports or differential rates of tax on input and output. Now, explanation B to section 38 lists out certain situations and how the relevant date would be linked with those situations. In the case of goods exported out of India, where a refund of tax is available in respect of the goods themselves or the inputs or output services used in such goods, the relevant date would be seen like this. If the goods are exported by sea or air, the date on which the ship or aircraft in which such goods are loaded leaves India. If the goods are exported by land, the date on which such goods pass the frontier, or in case the goods are exported by post, the date of dispatch of goods by post office concerned to a place outside India. Secondly, in the case of supply of goods regarded as deemed export, where a refund of tax paid is available in respect of the goods, the relevant date will be date on which the return relating to such deemed exports is filed by the taxpayer. In case of goods returned for being remade or refined or reconditioned or refurbished or subject to any other similar process in any place of business, the relevant date would be the date of entry into the place of business for the purposes as aforesaid. Now, in the case of services exported out of India, where a refund of tax paid is available in respect of services themselves, or as the case may be, the inputs or input services used in such services, the relevant date will be the date of receipt of payment in convertible foreign exchange, where the supply of services had been completed prior to the receipt of such payment. In other case, the date of issue of invoice, where payment for services had been received in advance prior to the date of issue of the invoice. Nextly, in case where the tax becomes refundable as a consequence of judgment, decree, order or direction of any appellate authority, appellate tribunal or any other court, the relevant date will be the date of communication of such judgment, decree, order or direction to the taxpayer. In case of refund of unutilized input tax credit, the relevant date will be the end of financial year in which such claim for refund has arisen. In the case of where tax is paid provisionally under the Act or the rules, the relevant date will be the date of adjustment of tax after the assessment has been completed. So, in every situation, the relevant date varies, and the time period for filing the refund application, which is 2 years, it is important to see the situation and the relevant date, how it is to be seen. Now, nextly, for filing the application for refund, in addition to section 38, the refund rules are also important to be known, to be understood. I will be dealing with the rules which have to be kept in mind while making application. Read with section 38 as well as the refund rules. A taxpayer may file an application in form GST, RFD for refund 1 electronically through the common portal, either directly or from a facilitation center notified by the board. Where the application relates to the claim for refund from the electronic cash ledger, an acknowledgement in form GST RFD 2 shall be made available to the applicant through the common portal electronically, indicating clearly the date of filing of the claim for the refund. Any claim for refund relating to balance in the electronic cash ledger may be made through the return for the relevant tax period in the form GSTR 3, GSTR 4 or GSTR 7. The application for refund of any amount after adjusting the tax payable by the applicant out of the advance tax deposited by him under section 19A at the time of registration shall be claimed either in the last return required to be filed by him or only after filing the said last return. Application of refund in case of export of goods shall be filed only after the export manifest or export report has been issued. In respect of supplies made to the SEZ unit or a developer or supplier regarded as deemed export, the said unit or the developer or the recipient of deemed export supplies shall file the application. Together with the refund application, there are certain important documents, relevant documents to be attached. In different situations, different documents may be applicable to be attached. I will explain you briefly the situation and the documents which are important to be attached in every situation. So, where the refund is due by virtue of an order of the appellate authority or any competent court, the reference number of the order and a copy of the order passed has to be attached. The reference number of the payment of the amount claimed as refund has also to be attached. Where the refund is due on account of export of goods, a statement containing the number and dates of shipping bills or bills of export and the number and dates of relevant export invoices has to be attached. Where refund is due in case of supply of goods made to the SEZ unit or a developer, a statement containing the number and date of invoices as prescribed should be attached. Where refund is due on account of deemed export, a statement containing the number and date of invoices as prescribed is required to be attached. Where refund is due on account of export of services, a statement containing the number and date of invoices prescribed and relevant bank realization certificate BRCs or the foreign inward remittance certificate FIRC should be attached. Where refund is due on account of supply of services made to any SEZ unit or a developer, a statement containing the number and date of invoices and the details of payment along with proof are required to be attached. Similarly, where the claim pertains to refund of any unutilized input tax credit accumulated on account of rate of input tax being higher than the rate of output tax, a statement in the form GST RFD 1 containing the number and date of invoices received and issued during a tax period is required to be attached. Further, where the refund arises on account of finalization of provisional assessment, the reference number of the final assessment order and a copy of the said order is required to be attached. Where the amount of refund claimed is less than 5 lakh rupees, a declaration, as I said earlier also, to the effect that incidence of tax and interest claimed by the taxpayer as refund has not been passed on to any other person. Where the amount of refund of claim is 5 lakh or more, a certificate in the prescribed form in Annexure 2 of Form GST RFD 1 issued by a chartered accountant or cost accountant to the effect that the incidence of tax and interest claimed as refund has not been passed on to any person is required to be attached. A declaration by the taxpayer or the CA certificate shall not be required in certain cases. These cases are where the refund of tax on goods and the services exported out of India or inputs used in goods and or services which are exported out of India, or for refund of unutilized input tax credit. The tax or the interest borne by such other class of applicants as the central or state government may notify. Who are the dealing authorities who will handle the refund issue? State tax authorities in case of a refund of SGST, central tax authorities in case of refund of CGST and IGST. While you are filing the application is to be acknowledged by the department. Where the application relates to the claim for refund from the electronic cash ledger, an acknowledgement is issued in Form GST RFD 2 through the common portal electronically, which clearly indicates the date of filing of the claim for refund, because the time is crucial in case of refund, not only for filing but also for disposal of the applications. The application for refund, other than the claim for refund from electronic cash ledger, shall be forwarded to the proper officer who deals the refund, who shall within 15 days of filing said the application scrutinize the application for its completeness, and where application is found to be complete in terms of the prescribed rules, an acknowledgement in the form GST RFD 2 shall be made available to the applicant through the common portal electronically. After the application has been acknowledged by the department, the scrutiny of application takes place and an order is passed. The officer designated for the purpose of dealing with the refunds will scrutinize the application, and if he is satisfied that the whole or part of the amount claimed as refund is refundable, he may make an order in Form GST 4 accordingly, ordering for the refund. The proper officer, in case of any claim for refund on account of export of goods or services made by such category of a registered taxable person as may be notified, refund 80% of the total amount so claimed in the refund application, excluding the amount of input tax credit provisionally accepted on a provisional basis, and the balance 20% shall be paid after verification. The provisional refund shall be granted subject to certain conditions which have been specified in section 38 subsection 4a. The person claiming refund should have during the period of 5 years immediately preceding the tax period to which the claim of refund relates should not have been prosecuted for any offence under the Act or under an earlier law where the amount of tax evaded exceeds 250 lakh rupees. The GST compliance rating of the applicant is not less than 5 on a scale of 10. That means the average compliance of the GST requirements should have been there. No proceeding of any appeal, review or revision should be pending on any issue which form the basis of the refund. And if pending, the same has not been stayed by the appropriate authority or the court. Now, upon examination of the application, when the proper officer is satisfied that a refund is due and payable to the applicant, he shall make an order in GST RFD 5 sanctioning the amount of refund. Where the amount of refund is completely adjusted against any outstanding demand under the Act or under any other earlier law, an order giving details of the adjustment will be issued by the proper officer in Form GST RFD 6. Where the proper officer is satisfied, he will record reasons that the whole or part of the amount claimed as refund is not admissible or is not payable to the applicant. He will issue a notice in Form GST RFD 7. No application shall be rejected by the proper officer without giving an opportunity of hearing. The proper officer shall issue a payment advice in Form GST RFD 8 for the amount sanctioned to be electronically credited to any of the bank accounts of the applicant mentioned in the registration particulars and as specified in the application for refund. What happens if the application filed by the taxpayer is found deficient on certain accounts? The proper officer shall scrutinize the application and communicate the deficiencies to the applicant in Form GST Refund 3 through the common portal electronically, requiring him to file a refund application after rectification of such deficiencies which are specifically pointed out. Now, for grant of refund, the provisions are as under. No refund shall be granted if the amount is less than rupees 1,000. That is specified in subsection 11 of section 38. So, small refunds will not be dealt with. But where the application relates to refund of input tax credit, the electronic credit ledger shall be debited by the applicant in an amount equal to the refund so claimed. Where it is found that the incidence of tax is passed on by the taxpayer to another person, although the amount is refundable, then the amount shall not be paid to the taxpayer, but it shall be transferred to the consumer welfare fund created for this purpose. In certain cases, the refund can be withheld by the department. Where the refund is due to a registered taxable person who has defaulted in furnishing any return or who is required to pay any tax, interest or penalty and the same is not stayed, his refund can be withheld until completion of the formalities, or it may be adjusted with the dues which are not paid. Refund may also be withheld if the matter is pending in appeal and no orders have been passed. Where the refund is withheld by the department, interest shall be paid for the delayed period as provided in section 39. Now, while the time period has been prescribed for filing a refund application, time periods has also been prescribed for finalization or disposal of the refund applications. It is provided in subsection 5 of section 38 that an order shall be passed for grant of refund within 30 days of receipt of completed application. Completed application is an important thing where deficiencies have been pointed out. So, unless rectified application is put in, that will not be counted. Section 39 of the Act provides about for the interest in case of delayed refund. Where an interest is due and payable to the applicant under Section 39, that is when the refund has not been made within 3 months of filing of application, the proper officer shall make an order and a payment advice in form RFD 9 specifying the amount of refund which is delayed, the period of delay for which interest becomes payable, and the amount of interest payable in such case. This will be credited to the bank account of the applicant as per the direction RFD 9 issued. Now, as I mentioned, where incidence of the tax or interest thereon has been passed on to any third party, although refund is available, the payment will be withheld. Instead, that amount will be transferred by the tax department to the Consumer Welfare Fund. Section 40 and 41 deals with the Consumer Welfare Fund. The central and state government shall set up this fund. The amount of tax, as I said, and any income from the investment thereon shall be credited to this fund. The fund shall be utilized by the central or state government for the welfare of the consumers in accordance with the rules that are made subsequently in this behalf. So, friends, in brief, these are the matters, these are the provisions or rules relating to the refund of GST. The next topic in our today's agenda is tax deduction at source. Section 37 of the GST Act provides for the tax deduction at source. The central government or the state government may mandate it to deduct tax at the rate of 1% from the payment made or credited to the supplier of taxable goods or services where the total value of such supply exceeds rupees 10 lakhs. Who can deduct TDS? It is specifically provided that TDS may be mandated to be deducted by a department or establishment of the central government or the state government, any local authority, any government agency, or such category of persons which may be notified by the central or state government, and that also on the recommendation of the GST Council. In case of deduction of tax at source, the value of supply shall be taken as the amount excluding the tax indicated in the invoice. That means the basic price. When the TDS has been deducted, the amount deducted as tax shall be paid to the credit of the appropriate government, that is state government or central government as the case may be, within 10 days after the end of the month in which such deduction is made by the taxpayer, by the deductor. In case of delayed deposit, interest shall be payable by the deductor. The recovery of any defaulted amount of TDS deducted but not deposited by the deductor shall be dealt with in terms of Section 51. Where any tax has been deducted by the specified category of persons, a certificate shall be furnished to the deductee mentioning the contract value, the rate of deduction, the amount deducted, and amount paid to the appropriate government and other prescribed particulars. A fine of rupees 100 per day is prescribed subject to maximum of rupees 5,000 if the deductor is not able to issue certificate of deduction within 5 days of deposit of TDS to the concerned deductee. The deductee shall have a right or entitlement to claim credit of TDS amount in his electronic cash ledger and reflect in the return of the deductor filed under section 27. So, there will be a matching of the tax deducted by the deductor and the deductee electronically. Refund of the TDS amount, if it becomes due, shall be dealt with in accordance with the provisions of section 38, which we discuss right now. So, these are the provisions relating to TDS in certain specific cases. Now, the next topic in our agenda is TCS, tax collection at source. Interestingly, the provision has been made for tax collection at source in respect of e-commerce. Section 43C lays down the provisions regarding TCS. 43B defines certain terms and expressions relating to e-commerce, which I am not specifically mentioning here. It is provided in 43C that every electronic commerce operator shall collect an amount at the prescribed rate out of the consideration amount payable or paid to the supplier of goods or services. This collection will be done at the time of credit of any amount to the account of supplier or at the time of payment of any amount in cash or by any other mode, whichever is earlier. The power to collect the above amount shall be without prejudice to any mode of recovery from the operator. Now, whatever tax is collected at source by the e-commerce operator, that shall be deposited with the appropriate government within 10 days after the end of the month in which this collection has been made. The amount of tax collected shall be deemed payment of tax by the concerned supplier, and supplier shall be eligible to seek credit of the same. A statement of tax collected at source has to be furnished by every e-commerce operator within 10 days after the end of the month electronically, in which it will be he will be mentioning all the amounts collected from each suppliers and deposited with the government together with the details of supplies taken by the operator. The supplies given in the statement will be matched by the department together with the details provided by the supplier, and a mismatch shall be communicated to both the supplier as well as the operator. The supplier will have to rectify the discrepancies, otherwise the same shall be added to his output liability and tax liability will be added or enhanced. The operator may be required to submit within 5 working days full details of supplies and stock in the custody of the operator, and any failure to submit the details required by the department will attract a penalty of rupees 25,000. So, these are the short details about the provisions of tax collection at source. With this, thank you friends.
So, I think sir dealt with the provisions in a very detailed manner, and I hope you all benefited from the same, because we do not have much questions and the questions that we have are repeated. I think sir has already covered them, but still we'll ask sir. Sir, basically the questions are relating to refund only. So, people have asked, what is the time limit for applying of refund?
Application for refund has to be submitted within 2 years from the relevant date. as I explained.
And I think sir explained the relevant date.
Relevant date in different situations or in different conditions have been different and prescribed under explanation B to section 38. So it is important to see that what will be the relevant date, and within 2 years of that relevant date the application should be submitted.
And is there any time limit for receiving refund?
The receiving refund has to be application has to be finalized within 3 months from the date of receiving completed application. In case there is any deficiency found in the application, the proper officer will point out the deficiencies and intimate accordingly. And then the taxpayer has to file the rectified application as per the deficiencies, rectifying the deficiencies pointed out by the proper officer, and then the application date, of 3 months will be calculated from the second submission.
And if the interest is not received within that period, will any interest be
given? Section 39 provides for payment of interest for any delayed refund.
And the mode of receiving the refund would be directly
electronically
directly crediting. Okay, and refund has to, is there any provision that refund has to be applied only with the return, or it can be applied?
No, it can be applied separately. It has to be applied separately.
It has to be applied separately. And all refund applications have to be certified?
You see, there are two stages where the amount is less than 5 lakhs and where the amount is more than 5 lakhs. In case the amount is less than 5 lakhs, a declaration is required to be made that the incidence of the tax or the interest which is claimed in the application for refund has not been passed on to any third party. In case the amount is more than 5 lakhs, this certification has to be made by a chartered accountant or a cost accountant.
So these were the questions that we had. We thank sir for taking out his precious time and giving us in such a detailed manner the presentation on TDS, TCS and refunds under the model GST law. We sincerely hope that we were able to answer all your questions and you benefited greatly from the session. Friends, the link of this webinar will be uploaded under the GST corner on the ICSI website soon, and you can view the same at your own convenience. Do not forget to log in next Friday, that is 11th of November, at the same time and at the same link. Thank you, sir.
Thank you very much. Thank you for your precious hearing.